Good morning, everybody, and happy Cinco de Mayo for all of you who celebrate. Tequila is allowed on today. You can eat as many tacos and burritos as you want today, and it is Friday. Friday ending the week, where, again, having gone into it pretty goddamn well prepared with essentially 7 green weeks in a row. We had that absolute crush fest on Tuesday and have been pretty boring since that move on Tuesday. Yesterday, 34-point range. Day after the FOMC, which again, my attorney contacted me. He gave me the list of everybody that complained that we didn't go 88 points like we had done as the minimum over all the other ones. But we have 4 red closes in a row. Now, I shared with you yesterday prior to the close, about an hour prior to the close, the data about these 4 red closes. So, as we see with Apple overnight, we are getting that streak to be broken. And that is why over there in the spread room, those guys that did take on the spread prior to the close yesterday, you are already up. Where is it? Yesterday, threw it out there. 346. No. Where was it earlier than that? I know I threw it earlier than that. Yeah, here it was. 230, 223. Since the 2009 bottom, that bottom that we hit in December 2018, it was on Christmas week. The week prior to that, which is when we raised interest rates that caused the big fucking hoo-la la and Steve Mnuchin and the plunge protection team to be trending on Twitter, Jamie Dimon, blah, blah, blah. That was the last time that we had a Monday to Friday red close every day of the week. Now, prior to that was right when we had the top over in October of 2018. Back in 2017, we had it, and it went absolutely nowhere because 2017 didn't move. It was 5 red days in a row. I don't even think the S&P was down 4 points on the week. But yeah, you need to go all the way back to May 2012 and then go back to 2011 when we were a little bit volatile. H1N1 had broken out right around this period here. And this was also, if you go and look at your chart, that was your big primary 1 bounce off the bottom and your primary 2 bottom before we started primary 3. So it's very, very, very rare that we are going to get a red close today. And so that trade that I threw out there was the 40-50, 40-55s. They were getting around $2. They're down at $1 right now. I've got an iron condor for you, which is pretty much working off of the same data, and it's collecting 250. I won't lie, it's a little bit aggressive. However, what I'm working off on that is obviously the green close, and I'm working off of this 410183. Right there, 410183 being our plus 1% level from today. So that's where I'm working on for now. Looking over onto our charts, this is what we can look for as our A, B, and C equals 3. Right down there, C equals A, 40, 51, 10. I was looking for us to get a little bit of a bounce yesterday and then make the move down. Obviously, we didn't. We have that gap right here at 40.90 to be filled. 40.98 fits appropriately for our 50 retracement back to our FOMC spike. And 41.17 for the euphoria. Oh my God, are we still doing this crap thing where we get a bounce back up to over here? So not really thrilled about that. Not really looking forward to it, but we will see what we get when we get it. So come on over, and I've got to make a pause here for a second. So yeah, quick glitch there. Had to make a pause, make sure we were going through everything right. But yeah, 4098 is where we should be up to. 4017 would be our 50 retracement back to that. And that right there, that 4101 would be our plus minus 1% level for today. Plus 1%, let me say that correctly. And that's about where I am looking for this to kind of get a little bit of a stall. 4100, 4115, and then we'll wind up seeing where we close. But we are definitely going to be looking for a close above 4060. Have the jobs report coming out later. QQQ. This was last week's low, which equals to, let's go back here, right over here, this 4049 over here on the SPX. That is your 4049 SPX over there on Wednesday of last week. We come over here onto Wednesday of last week, and you're seeing that you are definitely not getting the sell-off on the NASDAQ as you had over on the Dow and the Russell, which moved the SPX down there. So what that tells us is this is not ready yet until next week to give us the gasoline to fuel the tank to get that stronger move to the downside. Earnings are over. So what we're still looking at over here from a very wide point of view is we are still looking to get a move down into this 39.10, 39.75 gap fill, possibly even down to 39.50, maybe even 39.09, but we're doing math off of 41.06, 41.86. 41.87 minus 300, and you wind up seeing exactly where you're headed out for. So that's what we're looking at as we head into the month. We're only on the first week of the month. QQQ is going to be the fuel that takes us to where we need to be. Apple earnings, boom, boom, boom. And again, with that combo on that credit spread, I will go over all the credit spreads. I believe there are 11 that are all full credit this week. I could be wrong. It could be 12 that are all full credit this week, but we will see. And our VIX is back and alive. We got 2102 yesterday. Still have a little bit of a gap over here to fill after that little move that we had down. Once you got that move off the FOMC, little gap over here to be filled above. But as long as we can hold this 19 and start pressuring 21, again, we have a much bigger picture to be looking forward to, as we haven't been here since April. This is March 29th. We haven't been here since April. April was an absolute go fuck yourself month. Crushed volatility, kept us in a tight range. Yeah, sure. We did make money doing spreads during April. There was a lot of good trades during April. But a lot of guys were having some problems with some stuff that they rolled over because of that move that we had there in March. A lot of it's being able to be rolled off and taken and break even, fractional little loss, just getting out of that trade is extremely important when you come to this. You had 400% over there on that move for the FOMC, 25% only yesterday, got that 100% the day before when we were playing the bounce. Want to make money? Contact me, message me, anything that you want, but don't try and do this shit by yourself. I'm doing this 27 years. I was doing it by myself, and I had the same struggles as you until I finally said, you know what? I need a group around me. Having different eyeballs to see different things and to share different views, it allows you to tune in and start really understanding what is it that you're looking at. Then, once you start getting aggressive and start getting into your charts, start drawing lines, start understanding Fibonacci's, start understanding Elliott waves, Elliott wave counts, Elliott wave lengths, it all starts to come together. And that's the reason why I'm able to predict within a couple of pennies, many times, exactly where our tops and bottoms are and how to pick your strikes. Have a fantastic Friday. Have a great weekend. I'm doing one-on-one calls. A lot of you Glacier guys I'm still getting in touch with and dealing with the IPO. We'll handle all that over the weekend. And other than that, man, pay it forward. Make somebody smile. Even if you're not going to leave a big tip somewhere because you had a great week this week, just make somebody smile. Doesn't cost you a penny to do that.